Yo. Yo, yo, yo. Simon, what is up, man? Devin, Caston, CFATS, Thankster, Matt, Tickles, K-Mets, what's up? K-Mets, negative POI this time. Not yet, not yet. We still have a range. So even though November 8th, at least, or December 8th, probably an unlikely scenario at this point. So that projection is not in our favor right now. But I'm going to go over something else. I'm going to go over something that's pretty relevant um, that I covered here on the Discord earlier. So I figured I'd go live and talk about it because it's pretty relevant to what we could potentially experience in the next couple of days here with a lot of catalysts coming out, not only in on AMC but also in the market. Here we also have GameStop earnings today, so that's going to be important. But I want to go over the quad witching curve on both the market and AMC because I think the market is what's going to influence AMC in the end. And this is a deep dive here on the quad witching, very very important date. So I want to focus on this first, and then we'll go from there. This is going to be very important again for AMC. And AMC just had a very crazy spring here in literally the last 5 minutes. Look at how much volume just came in here. Okay, this was crazy. This is a crazy move. Volatility spike, implied volatility spike, massive. If you look at it on Thinkorswim, that normally is an indicator also that the price is going to start moving back up. Somebody on the Discord brought up a really good point too, is that there's these giant blocks of puts that are in the money for the next 2 weeks. This could potentially be that last push down to a major level of them exercising these puts. What happens when you exercise puts? Well, you're letting go of puts because why? You're bullish, or you think the price is going to start going back up. So if we have a lot of these puts being exercised, this might be an indicator here that in the short term, we will start to rally. And yeah, sure, we're at these levels. It sucks. It's not the greatest levels to be at trading after, being at this $9 range. We're back here at 6. But what I will say is there's a reason why it's called the mother of all bear traps. Bear traps suck. But, if this is a bear trap and we start climbing back up here soon, we can definitely call that the mother of all bear traps. We had one back here on earnings. This was a bear trap. Rally. Okay, there's been many bear traps on AMC. So let's go over the SPY because I think it'll make more sense when we talk about this here. Pull it up. All right. Here is the market. I changed it a little bit here so you guys can see a little bit more clearly what I'm going to go over. So quad witching is an expiration date with options. So option expiration date happens 4 times a year. So we're going to start here with December since it's relevant here. This is a whole year of quad witching dates. We have December. Okay, we have March. We have June, September, and then December again. Okay, so 4 quad witching dates here. Very important in the markets. Okay, and what's happening in between this, and this is where we draw the curve lines here, is just hedging. These guys are hedging just like we did for AMC. There's hedging that takes place where you can basically do, in simple terms, whatever the hell you want in between. And we can clearly see here that they're taking the price to a range in between. Look at it this way, right? So for AMC, for the quad witching here on AMC, this is where we use the 4-month cycle, which is very similar. 4-month cycle on AMC tracks all these quad witching curves. This is where we pull up AMC plus A. We have volatility, squeeze, or no, let's not use that, parallel, support zone. And remember how we talked about this right here, which happens every year? It's very similar in that you can do whatever you want in between. You see this giant gap here? Look at the prices up here. But if they're going to be hedging for this range, you can do whatever you want in between. It doesn't really matter. You're going to go back into that range. So it's a win-win for these guys. Hedging is very important here, obviously until it stops working and the cycle breaks. Okay, so same thing in the market. It has its own version of that, and this is it. So here we can see AMC. The SPY is trading at this 480 range is when it peaks. As soon as we're done here with this quad witching date, we start to come back down, and they want the 445. Okay, so 445 was the next level to hedge for, and previously it was the 460. Back here, okay, they wanted 366. And then the most recent one we had was in September. They wanted 387. So you can even, like, just think about it this way. Like, as soon as we're done with these quad witching dates, there's typically a pretty massive reversal in the market. It can go both ways. It can go up or down. In this case, I think it's going to go up. It's called, and you know what? This is why it's called the mother of all bear traps. Is because, well, this move here is expected to be hefty. Now, even though we didn't bounce off of that $400 range, which is a range, remember that. It's not the $400 level that we're going to bounce. It's right around here, and we're currently at support, so this is still valid. And I'm going to show you why it's valid. If we come back here, what the hell's going on? Okay, here we go. So all these have about a 10-day range that we're tracking, okay? So most of them are going to be about 40 bars long. We're on the 3-hour. We're on the 3-hour chart here. So most of them are going to have that. Now this one, for whatever reason, why did it do that? Okay. Okay, 46 bars is 10 days, 10 days, 10 days, 12, and then 10, okay? All very similar. Now, what I want to pay attention to, why are these being moved, bro? Why are they moving them? Okay. The only one that's had a very small range in the way it trades, so here we're just calculating from lows to highs or from highs to lows, giving us a percentage level. So this one's 3%. Now, here you can see that the market is okay. It's just trailing up, not much going on, not much volatility happening. But as soon as we fell down here, so this is when it all started, and where it starts to get relevant is when the market started to dump. Here you can see they're massive moves, 7%. As soon as we get into this range, which does last about 10 to 12 days, okay, we hit a bottom. This one right here lasted... From the bottom, it was a 7% rally, and it was a 6-day event. 6 days, it went up 7%. Here, in 10 days, it went down 12%. This one's crazy. This one basically did the same thing we saw back here, just it was a fake out. So it rallied 7%, and then it dumped 7%. Okay, still counts because it's volume, and that's all that matters. It's just the volume. It doesn't matter how you treat the volume. It's a pump, it's a dump. It's the same thing. Here, we have not entered it yet. We're just entering it now. 10 days from today, or from Friday, counting the weekend, or today, I'm sorry, today. 10 days from today, we have a quad witching date. And we haven't experienced this, what happened on the previous 3. And this is not counting December. This is counting this year. This year, all the quad witching dates have experienced at least a 10% or at least a 7% rally or dump. Okay, so there is a correlation here with that. If this applies to the current chart, we would see, if the correlation holds, we would see at least a 7% rally or a 7% dump, or from the levels that it's currently trading at. So you can look at this chart however you want. This is, again, just showing you that there is an important point of interest on the market, and why this this is something that is going to affect AMC in the end is because we normally follow what the market does, either at the peak or at the bottom, and we do trail a little bit behind. Meme stocks and these manipulated stocks tend to go up right before the market starts coming down. We've seen that trend here over and over again on the market. I'm personally bullish, and I still think this is going to go back up, and I think this is a bear trap. And I think it's going to take a little bit, a couple of more days for this to play out, but we can clearly see that this being that level of rejection here, it's not invalid yet. It's a fake out, okay? So us coming down to a level of support and slowly bouncing up to meet and cross maybe towards the end of the week, that's possible. We're going to get some data shortly, and then also we have data Friday, we have data Monday. There's a lot of data coming out in the markets, and I think that's going to be the main catalyst here as to how the price behaves in the entire market. So very quick analysis here on the SPY, but I think it's very relevant analysis. You guys not up here yet? Okay. And yes, we have GME earnings too. GME earnings are relevant because if GME, and we brought this up on the Discord here as well, earnings are interesting, are going to be an interesting play here. We are at a double bottom, which is good. Earnings that we were looking at here that go with the POI are back here in March. So we had a POI in March, and earnings happened right here. So the 17th. So actually the day after we opened red, it was a fake out. Well, I don't like playing earnings because they normally they crush the IV either way. It is towards the end of the week, so it becomes risky. And here you can see that we had earnings. GME had earnings. Sure, it pumped the next day, $3, fell back down, and then the week after that is when it started to rally. Okay? And what's crazy here is that this was a quad witching date, too. So this was a quad witching date. Now, this one's a little different because it happens after the quad witching date. The one that we're currently facing is before. Why there's still a range for the POI to play out? Because of just that, is that the POI sometimes is delayed about a week. We've seen it before on AMC, and why it's still valid. We can still see the price action come down. Now, sure, if we continue to come down and we cross support again, like where we're currently trading at, I don't like the range. I don't. But if we start to reverse back up quickly here with the entire market, this is why it's going to be called the biggest and, biggest mother of all bear traps. Because of that, if we have a major fake out here and everything starts to go back up. So, yeah, this is not the first time it's happened, guys, and I just showed you the SPY chart. So why can't that happen again? There's a clear correlation with this. Okay, 3 in a row that have at least 7%. That's the minimum. The largest one here is 12%. So just imagine like a 12% rally on this. I mean, that's 330, 340 is a 12% rally on the market if it did something like this. But again, looking at it from like a conservative approach, I would be looking at the 420. This is the one level I've been calling for here for a little while. And this to me is not, this doesn't scare me just yet. You can look at many other setups that we've had here. How many other fake outs have we had in the market? Look at this one right here. This Looks literally the same. This pattern here comes down, trades sideways, pumps, rallies. Same thing. Goes up 7%. This would go up 7% here on the 13th or the 12th. 12 goes up. So normally, if this, say this does continue to go up, we go up to this range, and then AMC rallies, that's when it would come back down. So paying attention to the volatility right now is going to be key on AMC because it did fall and almost hit $6, which is insane. But it can still have the potential, it still has the potential to come back up. It hit $6, more than 1 million in volume on the minute candle, and it rallied. I always say rally, but dude, this is crazy that in 2 minutes it went from $6 all the way up to $6.35. You could see what that did to the volatility. Volatility is very, very high right now from that massive volatility spike on this short-term dip here. But yeah, this POI, sure, it has been sucky, and I'm fully with you guys in that. There's the thing that, for me at least, and I'm sure for a lot of you, is knowing and tracking these ranges of when we see this volume coming in. I just released a indicator today. It's called PFV, and this indicator shows us just that. This is one way to prove that the cycle is real. Why I really like this indicator for that reason. It's minimizing everything else in between, showing us the major levels in volume. So for this, it's like you can, this spike that we had back up here, unfortunately, was a short-term fake out. And you can experience multiple fake outs here. I mean, just take a bars pattern, say we're here, right, on the cycle. That's a fake out right here. You can see that the levels here are similar. The POI can still be active here in the middle of December. The reason for this, let's pull up the cycle. It's a very easy way to track this. So all right, so again, let's talk about the POIs here. So most of it just starts back here. It starts in November, but this is where it all got triggered. Where you saw the full effect come in is January. So we know that here on the PFV, it's showing us clear that there's a massive little hump, right? So dry, nothing going on, and then you get your next one. Another hump. So this is where the POI lies, right? We got 1, we got 2 on the peak. Now we come down here. You can see there's another hump right here, and this is the projector fake out. So number 3, volume on the POI. Now we have an inverse POI. Inverse POI means it comes down, heavy come down. Another one. Okay, this is our one in March. And this is the one in August right here. Okay, so all of them, you can clearly see that they have, and they do land on these points of interest, which the green and the blue portion of the cycle. You can see here that it's trailing down. You have a very small, almost like if you track. And the cool thing about this indicator is that you can track, and just how we track charts using log, you can kind of do this and see what levels here look similar. Price times volume, so it works very similar to a volatility indicator. Now here we haven't had that hump, right? That next pump, and we're already in the POI. So one thing that I mentioned as well, and why I give it a little bit of time, I don't just cancel it out. And I'm patient with it. Even like, sure, it can hurt in the end, but there's a correlation here. When there's high correlation, I mean, that that's the thing about these indicators, guys. If there's higher correlation with something, it's a lot easier to to have a higher conviction in that things would play out a certain way. Sure, we're just tracking volatility, but there's a lot of things that line up with what's happening here. So, right, you do always have to have a good risk tolerance and a good approach to this whole thing because nothing is guaranteed, of course, but we can see a clear correlation here. All right, so let's go ahead and pull up the cycle POI. Here we go. I want you guys to pay attention to this because this is what's gonna kind of goes with the quad witching that I just pulled up on the SPY and why it's relevant. But let's talk about this delay here on the POIs. Remember how we also pulled up the sector correlation on Ethereum Classic AMC and how when in the markets, when you have a period where everything tracks and almost tracks the same. This happened back here from November till March. The market basically tracked the same for a pretty long time, about 4 months. Then it slowly started to separate. When the cycles separate and the sectors start separating from one another, you're also going to have some gaps in between the way things the way things track. And we started to see that here on these POIs because here you can see it plays out early, right before, like right in the green portion. We see it play out here. It got delayed a little bit, and it's always been end of the month going into the month, and that's normally the range we track. It's about 2 weeks. So here we start to go up right in the middle of the green portion here, and then we peak on the green portion. Okay, so there's already a separation. There's about a 4-day separation in the way these track. Here we have upside. We actually have early upside going into the POI. Here is a volume candle, major volume candle that we have not seen in between, right? So we have that breather cycle that we've already acknowledged and we experience every time we have these POIs. So 2 of them, major volume coming in on the point of interest. Now it's coming down right around, we haven't peaked here on what is, this is the May 28th of 2021 going into June 3rd. And here we're going down, but we're still in the POI. The POI is not over yet. So it's possible here that if we don't start climbing by, the next week or so, and this gets delayed until the 16th, that we will have that small separation between these cycles here. So there is a good, 4 or 5 days of separation between this one and this one. So that's the case here. This is where we start climbing up towards the end of the cycle. So I mean, it's a little bit difficult to understand this concept because cycle analysis, this is something that it just happens in the way things cycle around one another. And one great example here, analogy, is looking at planets, how they start off, they all line up together, right, in their little, in order or whatever, and then they start circling around, and then over time they'll come back in the same order, right? I think that's how the market works. It's like one cycle does that, one sector does that, and then comes back into it. But they do it within themselves as well. Like stocks do it within themselves. So you'll come back into it. But this is just another way to treat the it's another way to treat the cycle in that once it starts to separate and comes back in, that normally to me has been an indicator that we will start to see new levels because we can't just remain in the same the cycle or else things wouldn't fit. They wouldn't match up. It has to be like a puzzle here. So once we start to gravitate away from the cycle, to me that's normally an indicator that you're going to start to see new highs, new levels. So I hope that makes sense. I'm going to have to make a video go more in depth on that, but I'm still pretty convicted here, and I want to watch for these levels. I think a major level to watch out for right now is the right here where we're currently sitting at. You know, unfortunately, we did come down here. It sucks that we are trading at $6. Yes, I agree. But we've seen fake outs before. And one thing to watch out for, man, quad witching. All right, quad witching in the markets right now. It's very important. Let's pull up the SPY real quick on the minute chart. The thing I'm interested here to know about what, like, the market, it's been on a downtrend for 2 days, and it's right now it's crushing a lot of these contracts with theta crushing. So we're just trading sideways here. So normally on these days, I don't like trading the markets because, I mean, if you're, I mean, I personally I trade options, so theta is very important and volatility is very important on these contracts. So I trade most trades I make are going to be volatility trades. So POIs are mostly what I trade, and sometimes it's waiting for those plays because they're typically higher reward in that we're tracking volatility. So waiting for some of these trades is definitely, the SPY is the main thing, probably the main thing that I track here, apart from AMC. And that AMC also opens up a lot of opportunity for the rest of the POIs in the market. Tracking one cycle and understanding one cycle is key. Putting them all together to narrow down each POI individually. So yes, a lot of data coming in. A lot of data is going to affect these prices in the end. AMC is coming back into the $6 range. Let's pull up the intraday chart. Champagne Poppy. No more songs right now because YouTube takes my videos down. They get blocked. I don't understand it, but they get blocked. The rally videos do not get monetized. I don't monetize rally videos, and they still get blocked. So it's almost not, or else nobody can see them. If I just post them with songs, somebody who can't access the streams right now will not be able to see them later because they're blocked. So I gotta give that a little breather. Obviously, when we rally, you gotta be on the stream, bro. I'm sorry, because I'm still gonna play music, but not when I'm doing lessons or when I'm going over the charts, because I think this is relevant to anybody who can make it. I would hate if they couldn't watch it because there's music in the background. Oh, oh, okay. I see what you're saying. I see what you're saying, man. I have some demos, man. I have some demos out that I have to release. I do. I have a lot actually. Need to get back in that, man. Get back in on the. Get back in on the groove, baby. All right, let's do more analysis here. Let's find some some stuff. All right, let's find some stuff, figure some stuff out. It is trading at 6, so on this range, it is a psychological level. Just no, when you are typically at that range, it's more likely than not that you'll come into the $5 range very quickly. And if it does decide to spring back up here with the overall market, then it'll do very fast, just like we saw earlier when it hit 603, I believe, or 607, and then just quickly ran to 633. So it's going to be important to watch out for those. Okay, so little analysis here real quick on the PFV. All right, so we're gonna open up PFV down here. We're gonna change the spread a little bit so we can see more of the chart. So I'm gonna do 21. So we can clearly see these guys right here. The last two POIs very active. Now we're going to draw a trend line here, treat it as resistance. Okay, resistance, and we're currently right here. What normally happens when you cross resistance, right? You break out and there's a major volatility event, so you see more volume unless you get rejected. So kind of like what the SPY just did, we got rejected, but normally you see that fake out, right? Which we think is a bear trap. So here we can have the same thing. If this comes up here, it just being volatility doesn't mean it's going to come back and the price is going to go up. AMC has a correlation with high volatility and high volume going up, but the SPY, for example, is the complete opposite. The SPY, whenever there's a lot of volatility, normally that's associated with a downtrend. AMC is the complete opposite. It's like the VIX, okay, because it's a high volatile play. So it coming up here, sometimes though, we will see AMC dump and still see some volume coming in. But that's really interesting to really think about here, because if there's not a lot of volume coming in on the way down and there's not much volatility here on AMC on the way down, I mean, look at this move. We talked about this yesterday too, dude. Like right here, we have a lot of volume coming in green, but this completely orchestrated. I mean, we're down 34% in the past 3 market trading days. 1, 2, 3, 4. That's a lot, dude. And for the volume to be this dry on this is just concerning in general. Like, concerning in that, like, yo, like, if you can't see the manipulation, like, what the hell, dude? I mean, it's very clear. So sooner or later, we're going to cross this. And the crazy part here is the more you zoom out, the more data you're going to get, obviously. One that I was tracking here earlier was BlackBerry. And BlackBerry shows us because BlackBerry also looks like it's ready to start curling back up. Okay, so here's the trend line. You can see we had some volume coming in, some volatility, and now it's starting to head back up. It's like making its way back up. I'm going to change the values again. Oh, not that much. Okay. Okay, now let's go ahead and look at BlackBerry. Because BlackBerry has, it's important. With BlackBerry, let's do 3-day because we want to see data from way, way, way back here. And you can always change the spread. So 21, that's perfect. So this is what I want to talk about here for BlackBerry. So now that it's like normalizing this data, you can kind of see the chart looks similar, but it's flattening out the volume that doesn't really matter. That doesn't have as much relevance here. So we can clearly see here on the chart something that stands out is this back here versus what's happening here. A similar correlation between the two, and then anything in between just doesn't feel or seem like it's relevant because not only the price but also the volume they have very, very little correlation. So to me, looking at the charts from here is pretty relevant, pretty important. You can see the charts themselves also have and look pretty similar too. So you can look at it however you want, but BlackBerry looks pretty decent where it's at right now. And if you were looking at this chart from like a, because dude, all charts right now are on projector patterns that happen to come down to support again before bouncing back up. You can change this, go up a little bit. Okay. Right there. If you're a little boot man, a little mountain, whatever you want to call it. There's multiple ones we can see. Now this one here on a larger spread also has some similarity between what happened back here too. Here and then here as well. These two. Probably a little bit more relevant back here. Sideways and then it rallies. So how we are on the 3-day. Let's do Bitcoin as another example. It's crazy how much it changes the overall chart. Watch. This to me looks like that. See what the PFE just did? You can use it to study fractals too. I mean, showing us basically a fractal pattern here that you're not going to see on the chart. The chart's going to show different data, but that's the whole point. I mean, you're trying to understand, see what just happened here. Like we have some of these patterns even lining up, but the overall volume is going to look different. Because it's just think of it this way. This is mixing between buying and selling pressure and volume. So obviously the chart is going to look different. Because here we're displaying what buying and selling pressure actually looks like, but this is mixing both, which can sometimes give you a better perspective on when you can expect these volatility zones. You need to talk to Astro. Dude, Astro is the one that gave me this opportunity in the first place, man. Him and Rico shared me on Twitter way back in the day. Back a year ago. It's been a year. Holy shit. So I'm always grateful for those two because they shine the light gave me the opportunity. So I'm always fucking down to chat it up with those two. I've had chats before with Astro too. We did a live once. I would love to do more. I'm always looking to chat it up, man. Bounce off of ideas and perspectives is always fun. Thanks, man. Aldo, Jason, thank you. Leo, ML, appreciate you guys. Okay, let's do AMC. Mm-hmm. 3 day. Here's the 1 day on AMC. You can kind of already see how it normalized this data. Looks different. Rather than looking at this chart, which can kind of be intimidating, you can look at this one down here, and it's showing you everything, right? Everything that we know so far of these POIs. Okay, so one other thing that I think is pretty underrated right now, and it is about giving it a range and to let the range play out. But we just talked about the quad witching on SPY. Another thing that I didn't bring up right now is the spots indicator. We have a blue spot, dude, on the weekly chart, and it has not been canceled out yet. Typically, you can cancel it out in 3 weeks because normally depending on what time frame you use, you can still cancel this out. Like this would have to fall back down. But it's another way to sort of track this, dude, is that this indicator is really accurate. Let's go back to 08 just to understand it, right? And I always tell people, like, with this indicator, like, if you're going to track these spots and you see a lot of saturation, meaning that there's like 5 spots within a short period amount of time, whatever time frame you use, that's where you normally stay away and let things play out, because that the indicator here with what is showing is that there's a lot of uncertainty in the market and there's no clear correlation to what is happening. But for example, 08, we came, and this is why I don't think this pattern is active or is. I'm gonna show you why. But a lot of people are taking this pattern here and they're comparing it to what's happening right now, and I don't think it's valid. I think it was valid for a little bit, but it's not valid anymore. However, the POI, which is right here, is pretty valid in that it could be inverse, and we would start to see pressure to the upside. Not a full effect where we would, rally all the way up to 500 in a week or two. No. But the POI, as long as it's active, it would mean that you're just going to start to see some pressure to the upside here. So here on the indicator, you could see that we crossed the same. We have a pink spot. Here was the fake out, a short-term fake out, weekly chart. So this took about 3 months before faking out. So it went into the channel, came back down, and then here the pink curve acted as resistance, right? We did not come in here at all. We briefly touched it and came back down. Here, this is where we're currently at right now, but we're actually crossed. We've already crossed the spot. So let's come back to now so I can show you. Pink spot. We touch resistance, fall back down. This is where we touch resistance. I'm sorry, on the first one. This one, very brief. We still touched it, still relevant. And then here on this curve, we crossed it, right? So if you were looking at the OA chart, we would have to be down here for that to be relevant. So it's a lot easier to bring the price down when the curve is just hovering up, because it's showing us resistance, natural resistance here. And the OA chart would be down here for it to start coming down and completely ignore what happened here. But dude, this is a good sign. We have a blue spot, and this is what we've been waiting for, what I've been waiting for too, why I'm pretty bullish for the next couple of weeks, next couple of months, is because of this indicator. Not only this, CopyPat has projected this move from the bottom. It's been since October 10th right here. CopyPat spit out a projection here. And I have a chart on TradingView if you guys want to follow it, but it's on the TradingView account. You can follow that. It's on the CopyPat indicator, which if you press the website, the link below, it'll show you that. So very, very cool stuff. I want to see what the projection is now. Now the projection is constantly being updated. So if it has a, if there's some data coming in today from it being down, it's going to spit out something else. It's constantly updating. And the whole point of this indicator is just to show you a different perspective, provide a forecast of what the chart can look like based on historical time values, which is huge. We need that. We need it. Here's copy spots, and then here's CopyPat together. So it being the projection, you have your, now not only do we have spots giving us that projection, but we also have the CopyPat, which is just taking all the patterns down here. So we take one out. I actually really like this one. Based on that projection, the way I would look at this, based on time, I would actually take a pattern from the past and sort of look at this line here, because this right here, this is a massive, look at how long this pink curve is. It's huge. And in the markets in the past, we haven't quite seen that. Not this, I mean, we've seen it in 08, but even 08, we're coming close, and we're coming near to a reversal here. Look at how this was long, dude. Lasted a while. Many ways you can interpret this. But it would be nice to see that continuation here. If one, what was it that I pulled up? Dude, I pulled up on the daily here. I went all the way back to like 2000, like way back here, 98 or something. I was looking at this and it caught my eye because I was like, dude, are we here right now? Like, are we about to, I think it was this one too. And this is a fractal, of course. Do stretch it out, and I'm going to take a little bit more though. Man, and the projection that this gave me, it just fit. It was like, it fit really nice too. It was like this, dude. Which, I mean, you be the judge of that, but like, that would be insane, dude. If this thing well, no, not really. I mean, if this thing started to rally here March time and it's trading at 370, 480, and then it keeps climbing back up. So it'd be basically cancel out this entire chart here. Now, I personally think it's going to be slow on the way up. I don't think it'll happen this quick, but if we treat it as a fractal, this is where we can line everything else up. If this matches with the COVID correction, that's already a point of interest to track, because you have not one, but now we have two. And I believe, I don't know if this one was here or if it was down here. It's definitely not going to match the COVID. Okay, so the peak here lines up though. The peak, that's a pretty neat pattern right there. From this moment on, it's a pretty neat pattern. Now, if you zoom out, this is where you get the perspective part of it. Because now we have, so copy pat, we have copy spots, and then we also have a fractal to work with, giving us that perspective here on what the chart could potentially look like, which this one right here is a common pattern that we see in the market. Is so, and this pattern that we're looking at here, right here, it actually happened. It actually is AMC's arc, but it's also AMC displayed here. You guys can see this. Now, this part of it would go up a lot higher, and then it falls back down. But right here, that's basically what the market would be doing if we extended it that much. You can also look at it like this, because these two are like the same. Talking about fractals, these two are the same pattern. If you just extend it like that, right there, same thing. But the one I want to talk about is this one. So you can kind of see what I'm talking about here, and I'm just trying to show you guys the kind of pattern that this is. There's normally a fake out with a what is a triple top or a triple bottom if you flip it setup, followed by a dump. So and all this is doing is just spotting the POI. It's not saying that this is going to rally that much, like right here or anything. So don't take it like that. I'm just trying to show you what I'm talking about here with this. Anyways, that would be pretty neat, man. That would be pretty freaking neat. All right, what's AMC doing right now? Let's go back on Amy for a little bit. All right, so we're just at the $6 range. We have not fell below yet. I'm gonna pull up GME volatility. GME. Okay, here's a prime example of saturation on copies on spots. Okay, so all these are pretty clear, right? Most of them, they project the upside and downside. They do a good job projecting that. Here, starting from this point on, you see a blue cross, blue spot, comes back down. So it's a safe way to trade, in my opinion, is that depending on which one you catch and which one you use, I've noticed that the smaller curves that you find in between, for example, this one right here is a very small pink curve. If you get a inverse color spot, that normally indicates a big push. So this one right here, you can clearly see that. Fell below, falls on top, acts as support, and then falls below again. And then here you can see there's already like 5 spots. So it does indicate that a big move is coming, but it's harder to track the direction because there's no clear curve here. I mean, dude, look at how much they've suppressed GME right now. It's just been trading on this same range here, 25, ever since September. I mean, dude, Talk about theta crushing this. This is insane. Like, it's been doing nothing. GME's just been trading sideways since September. So pretty bad. And then not only that, but I mean, PFV here can clearly show us that as soon as this POI was done with, came down in September for GME, right? It was flat. There's not much going on. Okay, let's look at Ape now. Ape, it's very important that we do not treat Ape using indicators that look at historical data. It's not that relevant with charts that have very little data prior to it. This is why the Ape, AMC plus Ape indicator is something that I use here to track certain levels. And I can apply indicators onto this chart, which is neat, but I can't, we can't use everything on Ape, just Ape itself, because it doesn't have that much historical data. And you guys know, for example, here, this would not be relevant using the spots indicator here because it doesn't know what's happening prior to this. So this is incorrect already. Using spots, PFV you can use, but you have to use it on a shorter time frame. Even a shorter time frame, I would mess with the spread. So I would do the 30-minute and then up the spread to, let's try 512. No. Yeah, let's try 512. See if that does. Nope, too much. All right, so 256 is okay. But I'm going to do one more. Okay, let's keep it at 256 and just go on the 15-minute. Nope. Okay, a little bit better. You can see how Ape is reacting to this. It is narrowing down a lot, and treat it as you would a chart. We have resistance here, and now it's crossing, or it's about to cross on the way up. Now remember, this indicator is just tracking volatility, so it's not going to, anything on the way up does not indicate upside all the time. For volatility plays, there's a higher correlation with upside when volatility is high, but that's not always the case. Looking at these on a smaller time frame can sometimes give you incorrect data. I recommend using this indicator on larger time frames. Definitely is correlation with this, though. We can clearly see that from September 26th, we are currently crossing resistance. Or no, we're about to. We're about to cross resistance, actually. Ooh. Okay, let's do... Man, this is why I love this indicator. 12 was perfect. All right. You guys see that trend? Nothing in between here matters. Only the big spikes on the PFV You can clearly see one from this point on. It's been getting smaller every time. One way to track it. You don't need to use resistance all the time, but one way to track it is knowing that the previous level is at least higher, and that'll still show you a clear downtrend here, and we can see that it's starting to come back up. So what this is indicating right now is that we're likely going to experience a push soon, because when you cross resistance like you do on a chart, that's typically an indicator that, well, you're going to cross it, right? You're going to go up. So what's going to happen? You're going to have more volume coming in. Okay, so vertical line, let's add them right here. Here's your volatility. What happens here? You dump. Okay, one of the ones that dumped on volatility. This one also dumped. So already showing you here on the micro times when it does dump and does not go up. This one went up. All right, so we've had one go up, one dump, and then if we go way back here, the only one I could see that has higher correlation is this one, and this is a pump and dump. So most of these are followed by, actually it's a 50-50, but they are typically pump and dumps. There are none here that have a continuation, at least, and I think that's how we normally treat APE. APE has, remember, it has a different use than AMC. Okay, APE is not, it's not the same, and there are different things to track. Now, we can definitely see from here, at least, these are fairly the same. I think in height, maybe one's bigger. Actually, no, this one is bigger. That's good. So there is a clear correlation here on a downtrend in volume as it's coming down. So we're due for another one, meaning that since we are getting close to this POI, it's likely that here soon we're going to see some price action on APE. Now, whether that's upside or downside is not something that I can tell you, because APE has already strayed away from AMC's correlation. We've already seen that happen. So if AMC starts to rally and APE doesn't, again, they're not necessarily tracking each other right now. All right, SPY is looking interesting. Almost like it wants to start rallying back up. Spot's 15-second chart is awesome on the SPY. Awesome. Look at this. Like whenever, and I think it's really good at spotting reversals on a downtrend, more than on an uptrend, at least from what I've seen. But it works both ways. But for example, back here, it crosses, and then on the way down, remember, it acts as support until you cross again. It starts to rally. So here you can see a clear version of that. It crosses down, crosses back up, rally, and then back into the channel. And that right now it just crossed down, right? So that's normally an indicator that it's going to continue going down for a little bit at least until we get our pink curve. So this is where we get our little projection, which is copy spots, which is down here. And every time frame you use is going to spit out something different. So every time frame. So the whole point here is for this to just help you on the analysis that you're already doing. This is copy spots now, giving us a projection on price. And a good way to sort of backtest this tool here is using the replay button. You just go back in time and see like, yo, did this time frame work here? Here you can clearly see I just picked a random spot. Now you just draw your trend line on the way down to your desired projection. Here I have 50 on my forecast, and then I take out copy pat and I press play. Wow. That's amazing. This is like bro, this is what I'm saying, man. Like this indicator is just insane. You like spotting these freaking POIs intraday. You got Sava flying right now? Is it? I mean, Sava's going up. This was one of the stocks that we tracked on a POI a little bit ago. Very nice profits on this, and it's currently. So this that we're looking at right here, it's currently in a what we call a hovering projector pattern. Hovering projectors normally do not come down and test support. There's a different level it's tracking right here. I can see that it's currently tracking this one. So for these, there normally is a fake out, and the fake out is down here. So Sava's looking really good right now for a potential continuation to at least cross and touch support again. We could be making a flag now just based on this projection. I can pull up. There's copy pat right here projecting the next move. Clear. Look at this. I just drew this trend line, and copy pat just came up and touched resistance before coming back down. I like this. I like the setup here for a potential push up. Now, I know Sava has high volatility, so since I do the option thing, I normally don't play plays that have already gone up in volatility. This is one that definitely has a lot of volatility right now, so I normally let it just breathe and wait for a next opportunity. Mac, these are indicators that I made. They're on the website. If you click the link below, I have 3 out so far, and then hopefully in the future I'll have more out. So currently I have, I can't for whatever reason do that. Let's see if I can pull it up. All right, so here's a website. Here are the indicators, spots, copy pat. PFV is the newest one that I just showed you guys. It's the newest indicator. And here's some of the other stuff that I offer. I just released a new thing. It's called Sparks, and a lot of applications don't. The only one I know has this is Webull, but this is just an example showing you how the Sparks watch list works. It's taken from TradingView, so you get a spark line here of the intraday chart. So I use this a lot for crypto. In crypto, you see there's going to be like 100 spark on the watch list that I track, and they're in order on the way down, so you can clearly see which ones are spiking up, which ones are coming down. So this is more for convenience more than anything, showing you which ones are going back up. This is a good way to spot volatility sometimes if you're not the type of person that likes looking at data or uh, alerts that way. I'm more of a visual person, so I really like the Sparks watch list. But here are the indicators: spots, copycat, PFV, and you get that all with the membership, which is 50% off. So head on over, man, for the holidays. Yeah, and a lot of people do message me on Twitter asking, like how the Discord works, like what are the kinds of plays and stuff. Um, I basically just share my perspective on what I do with the markets, what I look at, and a lot of it is people that are coming in are um, they're very familiar with the cycle already and how the cycle works, and me posting these POI charts where I'm tracking certain volatility events and stuff. That's for somebody that's experienced in that, they can kind of treat their approach, whether it's just shares or options, and sort of use these POIs to their advantage. So there's been a lot of different people on there that have their own plays and have stuff like that. But I still send out Discord plays and all that good stuff, and also crypto plays. Started doing that recently here. Some of the POIs. Okay, so back to Amy real quick. We are actually holding this level. We're actually holding it pretty nicely here. We have not crossed below 6. Okay, I'm going to do a... You know what this is freaking making right now, dude? Is it? No, it's not. It's not Doge. But here, let's pull up Ethereum Classic here for what I can kind of see. Yo, hold up, dude. Okay. Oh, and I love this projection here on CopyPat. Freaking, this is, dude. Look at that. That's freaking awesome right there. Awesome chart. Okay, dude. Bro. Why does this look like AMC right now? Like exactly like AMC, like what AMC is doing right now. Broski. And I'm talking about like this part down here. When I see something, bro, I'm like, we need to talk about this. What's going on? Yeah, I thought it looked pretty similar, and it does. Wow. Ethereum Classic versus AMC. We know that there is a correlation between the two. This is a clear one. You got your short, comes back up, meets support one last time before springing. And now, take this though. I'm on the minute chart here for AMC. This is a 2-hour chart on Ethereum. Okay, so we just took since November 5th, when everything dumped here in crypto. We're starting to see it hopefully curl back up. But I think the bottom is very close for crypto. So, we just took this on AMC's intraday chart. A lot of the times what I do is I get intraday data and use it as reference for larger sets of data, because it does track larger time frames too. All right, guys, I'm going to go ahead and stop the stream here. Just wanted to go over the quad witching curve, not only for AMC, but not new findings here on the SPY. So if you haven't watched that, just go back on the first 15 minutes. I go over that. in detail. And we'll leave it here for today. I'll update some things as soon as I get that data, man. But we want to hold the $6 level. I think that's going to be important here. I would have loved it if we held this level here and bounced. But if this is going to be a fake out, and we're starting to see this with volume picking up, if this is going to be a fake out, then we need to start reversing back up soon. And I'm talking the next 2-3 days with the market. We need to start to see a V reversal here. So we'll leave it at that. And if anything changes, I will keep you guys updated. All right. Bye-bye, guys.